Is the UK property market still a good investment in 2025? Or is it time to look elsewhere? We're going to be comparing it with cryptocurrency, with stocks and shares, to help you make an informed decision on where to put your money. Okay, so let's look at a snapshot of the UK at the moment. So on screen, we can see that house prices as of June 2025, the average UK house price stands at just over £378,000. Now, this is a 0.3% decline versus the previous month. This dip is attributed to higher stamp duty and mortgage costs, which is mainly driven by London. So across most of the UK, there hasn't been much of a dip, but in London, there has been. Next up is mortgage rates. So mortgage rates stand currently at 4.25%. However, inflation is at 3.4%. Now, with these stats, the average 2-year fixed mortgage rate have decreased to 5.12%, which is down 5.93% from 1 year ago. Now, transaction volumes have actually increased versus last year, and we've seen a 61.7% increase in transaction volume. So we can see that mortgage rates haven't actually changed too much since last year, even though inflation is lower. However, the main issue comes with affordability. Now, for first-time buyers, it's a continued challenge to get onto the property market. Whether you're buying your first home or you're investing in your first home, you have to put a larger sum of a deposit down than previous generations. Now, this isn't across the entire UK. Areas like London have actually seen a decline in property prices over the last year versus areas like Motherwell, which have actually seen an increase. Now, the reason for this is just pure demand. People are being priced out of London because it's so expensive, but areas like the Northwest have become slightly cheaper and more attractive. And lastly is liquidity concerns. One of the big issues at the moment is how much liquidity you have, which is essentially how much cash you've got in your pocket. Quick message to say, if you're enjoying the video, consider giving it a like, subscribe, and property investing. Now, with real estate demanding much more money up front, the concern comes with, do individuals or investors want to lock their money away in a property for a long period of time? On screen now is a table showcasing property, stocks, and crypto, and just a few pros and cons of each. As you can see, property is illiquid. It takes time to get the money out of the property. You have to either sell or remortgage, which can take weeks and even months. Now, with stocks and crypto, there's high liquidity. Essentially, you can sell really quickly and you can take your money out within the day normally. However, the volatility of stocks and crypto is much higher than property. It's very easy to see a crypto coin go and drop 50%, but houses, well, they've never really done that except from 2008. So who should actually be investing in property now? Well, in my opinion, individuals that have a long-term investment horizon, that want a tangible product that they can see and touch. The individual or people buying the house need to be aware that actually it's a big commitment. If you're buying a house, you're actually buying a mortgage. The bank owns that, you don't own it. And you're putting your money into an asset that either could go up or could go down over time. Now, historically, house prices have gone up, and I can only see them going up in the future. But depending on whether the house that you buy outpaces inflation is a different matter. If you want an investment that you can see, touch, walk in, smell, demolish if you want, then housing might be the right choice for you. Now, lastly, I'm going to talk about why I think housing is actually one of the worst investments that you can do in 2025. Let me just start by saying this isn't financial advice. I personally don't own a home and I don't have any rental income from a home. Many people, maybe including yourself, do, and you might say that actually it's one of the best investment pieces that you've ever done. If you're starting out and you're looking to invest your money in a way that generates you income over time, I don't believe that housing is the best avenue for that. And the reason is, one, it's never been more expensive to buy a home than ever before. Two, interest rates are still fairly high versus pre-COVID levels. 25, 30 years ago, buying a property was extremely attractive. It wasn't super expensive to buy that asset. You could hold it for a long time. The quality of the builds were great. You didn't need to do much renovation, and you could get a rental income as well as price appreciation from that property. However, buying a property now has become so tough for first-time buyers or investors that actually, unless you're buying an apartment complex, it doesn't make any sense. Now, I'm sure that some people in the comments are going to say, I've bought property and become richer from it. That's fair enough. And I'm not saying that property can't get you rich. I'm just saying that I don't think it's the best investment type if you're starting out. So what is the best investment? Well, personally, I would say that stocks and shares and even crypto are probably a more lucrative and attractive prospect for investors in 2025. People are always going to need homes, whether that's renting or buying or investing. They're always going to need somewhere to live. But I don't actually believe that the future of the UK economy and or the finance industry are homes. I believe it's cryptocurrency and tech stocks. Right now, in July of 2025, we've seen Bitcoin all-time highs, S&P all-time highs, NASDAQ all-time highs, tech stocks all-time highs, AI, robotics, chips, computers, software, and cryptography are all going to change the world. And there's an old saying, what made our parents rich won't make us rich. This isn't financial advice. This is just personally what I've made money from and what I believe the future holds for investors. Going back to my original question, is the UK property market still a good investment in 2025? The answer is yes, but it's not the best. You need to consider your personal finance goals and what they look like. Where do you want to be 5 years, 10 years, 15 years from now? Let's say, for example, you have the deposit for a house and it generates you £500 a month in cash. That's great. Now, over the course of a year, you'll save £6,000 in rental income. Now, the value of the property will potentially go up over time, but let's forget that for a second. Now, with that £6,000, some of that is going to have to go towards maintenance. I don't personally believe that buying a house is any more attractive than buying tech stocks for the future. I always believe that property will be a good investment in the UK. We're a very small island that we've seen stifling construction over the last 10 years. And like I said before, every single person in the UK is going to need somewhere to live, and the majority of them will live in houses. And although property is a good investment, I don't think it's a great investment. The £25,000 that you put as a deposit for a buy-to-let mortgage could be placed into a high-interest account through an ISA, and you can earn anywhere between 8 and 12% average in an S&P index tracker. With buying a stock, you don't need to pay down a mortgage, you don't need to pay down fees, you don't have to worry about tenants not paying their rent on time, you don't have to worry about maintenance of the property. All these things, all these headaches that can turn into a really big issue, you don't have to deal with. My goal is simple. Invest in the best long-term assets with the least headache, with the most upside, with medium risk downside. Bit of a mouthful, but hopefully you get the picture. I'd be interested to know what your thoughts are. Have you bought property? Do you intend to buy property? What do you think about my opinion on property? Let me know in the comments. My name's David. This has been Wealth Fund 21, and thanks for watching.